Have you been looking at a new way of investing into dividend stocks, particularly within the UK? I've been investing into iShares UK Dividend ETF, IUKD, for quite some time, but I'm really starting to look at the figures and worrying that there must be a better option out there. If you have a quick look at this chart, you'll see that IUKD has only grown about 26% over the last 5 years. And if you take out the dividend, that's actually a minus figure, because the companies that they have within this ETF are those older, more stagnant type of companies within the FTSE 100. They aren't showing any growth. And then I started having a look around and came across a fellow YouTuber, Tom's Personal Finance, where he was talking about factor investing, so looking at things like quality. And then I have one of my subscribers pops up a chat and says, why don't you go and have a look at Wisdom Tree and Quality Dividend Growth Range? And they've now got 4 different types of ETFs in there. They've got a US, global, euro, and now UK one. And in this video, I'm going to do a little bit of an overview of that UK Quality Dividend ETF, known by the ticker symbol of UGRW. Why have I started having a look into these different types of factors? Well, recently started using the Stockopedia research tool, and I think it is brilliant. It looks at many different types of factors for different stocks and looks at things like the quality, value, momentum, and ties that all together. And it has got sort of its own different types of Stockopedia screens in there, so you can go and have a look at different companies across the whole world. What I will do is I will stick a link down below. If you want to go and have a quick look at Stockopedia, you can get yourself a 25% discount. Let's have a look at Wisdom Tree. Let's kick off by having a look at their Wisdom Tree Quality Dividend Growth family. So as I said, there are a whole load of different ETFs in there, but they all have a couple of things in common. They're looking at investing into high quality companies that are highly profitable, have growing dividends, and they put their own ESG, so their environmental, social and governance spin as well, onto these different stocks. And I suppose not just Wisdom Tree, but many academics out there are looking at quality as being a cornerstone of any investment portfolio. And within Wisdom Tree's philosophy, they're looking at having sort of 3 main tenets that they're looking at. They're looking at having all-weather investments, and that's looking at their focus for their ETFs, looking at trying to be profitable and looking at medium-term growth, and sort of pulling in stocks that are going to hopefully provide that kind of all-weather balance. They do all of this by having lots of research, systematic approach to how do they choose the different stocks that go into the ETFs, and this is all underpinned by academic research, looking at companies that have got a high probability of growth as well. So why invest into quality stocks? And I suppose this is looking at companies that will have the potential to grow over time, and when there are the blips that there will always be within the market, they can hopefully weather those and sort of not drop as much as some of the other sort of higher growth stocks, those tech type of companies which will see larger dips during market uncertainty. So I suppose quality is something that people like Warren Buffett, Benjamin Graham, all look at as being one of the cornerstones of their strategies. Looking at long-term historical performance, academics are definitely saying that quality stocks do outperform the market over time. So we look at the Global Quality Dividend Growth ETF. It is looking at outperforming the market over the time period that it has been in operation since June 2016, and it's outperformed by just over 1%. Looking at an all-weather and balanced risk profile, we're looking at quality stocks having sort of 2 distinct levels to them. First, quality companies will create and generate or higher revenues, which then allow them to sort of compound their wealth over time. And because of that, or will have solid business models and financial strength, and that is what then helps them sort of ride out the ups and downs of the market that we all know about. If we then sort of have a quick look at this chart, we are talking about DWRL, IUKD, and that global quality dividend, GGRW, and looking at GGRW outperforming across that time period of the last 5 years. You see the reason why I'm trying to get out of IUKD, with it being substantially lower. So looking at quality dividend ETFs, you are looking at having a higher implied dividend growth rate, and basically looking at this table, you're looking at GGRG showing dividend growth rate of 14% as opposed to 9% for the MSCI index, with quality dividends in there coming in with a lower volatility. So this is the whole bit about volatility and risk. So that's just a little bit about the whole wisdom tree quality dividend philosophy and their way of thinking. If you're getting some value out of this kind of content, I would love it if you could think of subscribing, hit the like button, and why not leave a comment. But let's jump in and have a quick look at UGRW, looking at the UK dividend growth ETF from Wisdom Tree. It is really new, and that is one thing, so we're not going to be able to look at any historical data really on this, because it's only been around for less than 6 months. Key things to look at is the total expense ratio coming in at 0.29%. Looking at the dividend yield, so this is much lower than IUKD, but what we are trying to do is balance off that growth potential with the dividends. We are looking at what is the net effect of growth plus dividends, and hopefully with the philosophy and the experience of the global Wisdom Tree growth ETF, we'll see that continues to mirror or even outperform the market. Looking at 3% dividend yield coming in here, and if we jump across and have a quick look at the holdings within this ETF, this is very different to IUKD's holdings. If we look at IUKD, we have got financials in here as the lead sector, with your HSBCs, Legal and General, Rio and Aviva. Many of those companies are not particularly dynamic with their growth, whereas companies within here have been showing more progressive growth over the last few years. A few names that you may not recognize from your normal list of stocks that you would be buying as dividend stocks. If we then have a quick look at the sort of breakdown of sectors that UGRW is invested into, you are looking at almost 26% into the industrials, then financials, whereas if you look at IUKD, it is flipping that around and very much more into the financial side of things. So, and that is quite turbulent, so you can see why IUKD hasn't performed particularly well over the past few years. It's also 100% invested into the UK. Why don't you go and have a look at this video that talks about even more ETFs that you could potentially invest into, and maybe you could have a look at UGRW and see whether or not you think that is going to be one that is potentially going to beat some of those other ETFs on the best ETF video. Thanks very much for watching, and I will see you in the next one. Cheers, bye.